This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news about the latest pre-election Aussie Budget delivered overnight. But first, the American Retail Red Book Index rose 6.3% last week from the same week a year ago, suggesting buoyant trading in physical stores, gains well ahead of inflation. It is not only the strongest gain of 2024, you need to remember that it's on the back of a rising 2023, which itself was rising strongly in 2022. Their SME Sentiment Index rose in April, slightly recovering from the 12-year low in March, and better than forecast, which assumed it would slip again. Meanwhile, factory prices there rose more than expected in April, up 2.4% from the same month in 2023. This is about the average over the 15-year history of this data tracking, excepting the pandemic distortions, of course. But if there is a cloud, it is that month-on-month rise seems to be slightly elevated. American household debt rose 3.8% in the first quarter of 2024, just marginally more than the CPI inflation rate over the same period of 3.5%. And this excess brought a small but noted rise in delinquencies. As you might expect, mortgage debt rose less than inflation, given their hibernating residential property markets. Car loan balances rose at inflation's levels, and student loan balances fell, the only sector to recede. But credit card balances zoomed higher, up a concerning 13% over the year, and the basis of the rise in delinquencies. Total consumer debt, including mortgages, is now $17.7 trillion US. That's about 65% of US GDP, and near the lowest share since these records started in 2005. Back before the GFC, it was over 100% of their GDP. The American CPI inflation rate gets updated tomorrow, and financial markets seem parked up until this data is known. Markets currently expect a very minor improvement, down to 3.4%. Variations from that, or the core rate expectation, could well be market moving. And the US Fed boss Powell was speaking overnight in the Netherlands, but he had the same message again, that inflation is stickier than the central bank wants to see, and that rate cuts from them are some way off. But he also repeated that it is very unlikely that the next move will be a hike. In China, there are some signs elements of stress are spreading to insurers now. Several insurance companies have chosen to pay higher interest rates on their capital bonds rather than exercise an option to redeem them early, a sign they are facing solvency problems. Policymakers are focusing on the wider stress points, but still basically about their troubled property markets. In Germany, their widely watched ZEW indicator of economic sentiment rose more than expected in May to its highest level since February 2022. Improving economic conditions in the EU and China have contributed to a better outlook, analysts say. Expectations for domestic consumption, as well as the construction and machinery sectors, have brought substantial improvements in sentiment there. But today is all about the Australian budget delivered overnight. With the Australian economy the weakest it's been in 23 years, their Treasurer has handed down his third federal budget, delivering its second consecutive surplus, and setting the government's agenda as they head into an election cycle. That election is due in May 2025, so this budget has to be seen as the last major policy setting before then that could deliver results before polling. Initiatives such as the, quote, Future Made in Australia, unquote, program were at the forefront. Not only is this budget political, including tax cuts for all and a $300 rebate for household power bills, the reviewing media assessments are highly politicised as well. The surplus announced of $9.3 billion this year is off the back of generous company tax receipts, a pleasant surprise after the $1.1 billion deficit forecast in the mid-year economic and fiscal outlook in December. However, this will swing into a $28 billion deficit in the 2024-25 period, that's 1.4% of GDP, with larger deficits in the years following than previously forecast. And following up yesterday's note, the copper price is now officially at an all-time high at $10,977 a tonne. And the US Treasury 10-year yield is now at 4.45% and down 4 basis points from yesterday. And the price of gold will start today back up $20 at $2,355 an ounce. But oil prices have fallen back $1 at just on $77.50 a barrel in the US, while the international Brent price is now just on $82 a barrel. And the Kiwi dollar starts today marginally firmer than yesterday at just over 60.3 US cents. Against the Aussie, we're a tad firmer at 91.2 Australian cents. Against the euro, we're little changed at 55.8 euro cents. That all means our trade-weighted index starts today at just on 69.6 and up 10 basis points from yesterday, partly on a weaker yen. And the Bitcoin price starts today at $61,251 and down 2.4% from yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.